welcome back to Brashenomics, everybody. This is Heather Moore, and joining me now is Howard Choder, who prior to opening his own tax accounting firm, worked for the IRS for 15 years and has since then been with his own firm for 15 years. So splitting it quite evenly. Howard, how are you?
Great. Glad to be here, Heather.
Yeah, well, thanks for joining us. We really appreciate it. And when we first talked about potential ideas for the show, you had something really interesting that we hadn't really talked about before, and I was excited to explore this topic. And you had contributed to an interesting article on NPR about same-sex families and some tax benefits that they're being privy to that they weren't allowed to have in the past. So I wanted to bring you on today and give us a little bit of a history about that, because there's so much complication and I think misconceptions surrounding that rule. And taxes are complicated as they are, but for people who don't always get the same benefits and families, I think it's even a little bit more frustrating and confusing.
Right. The first thing, it ties into what you were talking about at the start of the show in your monologue, saying, when do we get help and when do we do it ourselves? Mm-hmm. And taxes are such a complex set of laws, regulations, forms, that even a professional, I take classes all the time, and it's very difficult for me, yet alone for a lay person to understand. And all they do is it's kind of a funny little joke tax preparers have, and that every time a tax act is enacted, we all laugh and we say, well, that's the Tax Preparer Employment Act, meaning that it just became more complex and more difficult for people. So what this article, that this news feature that I was featured on last year was a huge...
Yeah, last year, actually, just about around this time.
A little earlier. It was April. In January of 2010.
Oh, this is April. Okay.
Yeah,
so
it was
then.
featured.
Oh, okay.
And it was featured, but the actual law was enacted in January of 2010.
Yeah.
And what the law says, it was a chief counsel memorandum and a private letter ruling that stemmed from a registered domestic partners in California saying that we are registered, we live in a community property state, and should we be combining and splitting our income?
Right.
And they had been doing that in California for a few years. And they had asked the IRS back in 2006, should we do this? IRS said, no, you shouldn't do it. We don't believe in it. Mm-hmm. Defense of Marriage Act was one of the primary reasons in a couple of court cases. And then in 2010, they did a about face.
Okay.
180. And they said, you know what? We believe that they should. It is community property. If you are a registered domestic partner in California, Nevada, or Washington, which are all community property states, right, then in fact, one half of your income is one half of your partner's income is yours, one half of your income is theirs, one half of the deductions, you're splitting it even.
Even Steven.
And they said that you must, not that you even had a choice, but that you must split your income for, if you're a registered domestic partner in Washington State, California, or Nevada, you must split it in 2010 and later years. Mm-hmm. And then you can also make the election to amend your returns in the earlier years.
Prior, as early as 2008, is that right?
That's exactly right.
Okay.
Yeah.
So what does that really mean for people, though? I mean, is that an improvement from the tax filing options that, domestic partnerships had before?
Well, they never had an option before. And now what they've done is domestic partners are looking for equality. Mm-hmm. Is it equality? No, it's not equal to a different sex marriage, a heterosexual marriage,
like a traditional marriage where you can file jointly.
That's right. And because of Defense of Marriage Act, they're not entitled to that, but it's one step closer.
Right.
It's moving.
It's moving in the right direction. And there was a specific couple in this article that one was the stay-at-home mom and then the other was the primary earner. So for them, being able to split the income did provide quite a big discount in what they ended up paying in taxes.
Not quite a big. Huge.
I believe it was $22,000.
$22,000. One is a partner in a Seattle law firm downtown, mm-hmm, and the other is a stay-at-home mom, and they have 7 adopted children. Because one had such large income and one had no income, if you were to take it and then combine it and split it, they both have more medium type of income, and therefore a lot of the credits, and a lot of the deductions then showed back up on the tax returns, and it created a very large refund that they would have not been entitled to otherwise.
Yeah, not only because of the credits, just because they're in a lower income bracket.
Absolutely, at a lower tax bracket,
Yeah.
absolutely.
So it seems like for that type of situation, that's kind of ideal because it lowers the average income of the two people. But there also seems like there'd be other partnerships where this didn't really have as big of an income or an impact. It seems that it can't be I can't see any situations where it's a negative thing.
Well, it really, in my experience, it helps when you have disparate income.
Okay.
Meaning one earner is making a lot of money, one is not making as much. Now you level them out, and they're the people that have really paid off. If the two partners are making about equal amount of money, it's almost about the same.
Almost about the same.
Yes.
And now, is there any circumstances though where this would affect someone negatively? I read that it could mess up potential financial aid packages for spouses or childs, and I was curious to ask you a little bit about what that would mean.
Yeah, it could. I'm not an expert in FAFSA.
Yeah.
And I have in my practice a lot of same-sex couples, and they ask me, and I'm just not. I just don't know.
Yeah.
Whether or not they are splitting, because it's all over the map. I have some clients that say, well, I'm just going to give them my tax return with the split, and others saying, I'm just going to give them my W-2 without the split. And I don't think that FAFSA has come out with any hard and fast rules on how they're recognizing the income or the deductions.
Well, speaking of hard and fast rules, when, I was reading this article, it seemed that there's no way to properly file these type of taxes either, because there's no set up form yet either. Is that the case?
It's unbelievable. So this is the second year we've had this ruling in effect, and the tax software providers and the tax forms don't reflect this income splitting. It makes it extremely difficult for my firm and for all the other firms that I talk to, and we have to manually do this. It is a very time-consuming, laborious process that I don't understand why the IRS just doesn't have one more type of filing status and just call it registered domestic partner, and the software providers will then tailor their software for this very issue.
Well, what do you think? With changes in the ruling, there would be changes, in the way it was offered to file. I even noticed in the article that you have to hand write on these tax returns the type of filing that it is.
Well, because...
Explain that.
Well, the IRS still has not figured out how to process these. These returns have to be, whereas you and I and most other people, we electronically file our tax returns. These have to be paper returns. Like rolling back the clock 20 years ago.
It can't be anything online. Like you couldn't go to TurboTax and do this sort of filing.
No. It has to be a paper return. And then on the return, it may have Heather's name on it, but it has Joy's W-2 on it. And someone at the IRS says, why is Joy's W-2 on Heather's tax return? And they send it back and say, this is an error in processing. So what I did is I elected to write in big red letters and say, domestic partner, Heather and Joy, filing together so the IRS can understand.
Because there's not the option. So you literally have to take a big Sharpie.
That's right. As red, orange, yellow, highlighting as can be. And tell the IRS, this is what we're doing.
Yeah.
And yet, when you talk to the IRS, people at the IRS, they still haven't wrapped their heads around it. And while it is a very progressive stance, there are people at the IRS that don't believe in this stance. Whether or not they believe in it or not.
Well, it's not really up to them anymore.
That's right. But they still resist it.
Yeah.
And you talk to them, and there was a famous instance last year called the J. Bell letters that this person in the service center wrote and said, you can't do this. He took it upon himself, whoever J. Bell is, they never really found out, he took it on himself and said, you can't do this. And of course, the community got out and said, this is just wrong. And as tax practitioners and preparers, we were on top of it, and the service corrected the problem rather quickly.
Interesting. And with this, all these changes that are happening for domestic partnership families, same-sex families, there's going to be, laws that keep evolving and changing too. We talked before the show about the potential, the possibility that Washington may grant same-sex marriages, and that could possibly change the way things are recognized too.
Right. It's an ever-evolving set of rules, laws, and the hard part is you have different federal agencies with different rules. So you may have the Veterans Administration, who has a set of rules for domestic partners, the IRS, who has a set of rules, Social Security, who has a set of rules, and nothing is ever unified. And it makes it very difficult for same-sex couples to ever fight through this bureaucracy and know what the rules are today.
Absolutely. Well, and when it comes to taxes, like we talked about earlier, sometimes it's hard for people to ask for help, but it's definitely something you should ask for help with if you have something more complicated than a W-2.
I agree. If you have a W-2 and an interest from your bank account, I think TurboTax is an absolute great fit. If you have houses, rental houses, same-sex partners, if you have issues that are a little out of that cookie cutter, I think it is wise to go to a tax professional, whether it's me or anyone else who understands the tax law, who studies the tax law, and who does tax returns.
Yeah, evidently, when there's so many laws, like you said, that change every year, I mean, I don't understand how a person could expect to keep up with all those things.
I don't quite get it myself, but for us tax practitioners, we go to tax updates, we subscribe to tax journals, we subscribe to emails, or we talk to one another. It's an ever-evolving, fluid set of laws that are constantly changing.
Absolutely. And I just have one more question for you. Again, we're with Howard Choder, owner of Taxman.CC Tax Accounting. Do you think that because there are options for people to do their taxes and learn about it online, that they take advantage of that when they should be taking advantage of a tax professional and then are missing out on potential benefits?
Sure. I mean, for all of us, we think the internet is our grand teacher. Yes. And we can do anything. And maybe I have a tiling project in my bathroom. Well, I can read about tiling and I can look at videos on YouTube. And yet when it comes to it, what I do as a tiler and what a person who does tiling 24/7 for 15 years, they do the same job. It's going to look a heck of a lot better than the do-it-yourselfer. And it's the same on a tax return, is just knowing where everything goes, the ease of the preparer to do it versus you fighting, where does that go? And I have people calling me as, well, do I really owe $1,500? Well, I don't know if you owe $1,500. You did it yourself. And they are so perplexed by the whole procedure of it. Just like I would be perplexed. How do I set my tiles up in my shower? Well,
you had mentioned that you had a project in your bathroom that you did once on your own, and then once it was done professionally, you noticed quite the difference in it. We'll have Paul Coker come up next, who will talk about some remodeling projects. But if you have any questions about your taxes and want to learn more about the article that Howard was in on NPR, you can find more of his information on our Facebook page. It's facebook.com/Brashenomics, and I put your website up there for everybody if they had questions for you. And I want to just say thanks for joining us this afternoon. It was a pleasure to have you on and learn more about, all these changes that are taking place and some advantages that some of these people with the domestic partnerships can take advantage of.
Thanks, Heather.
Yeah.
It's been great.
All right. Well, again, Heather Moore, you're listening to Brashenomics. We'll be right back.